We're seeing Ethereum's price climb, and a lot of you are probably wondering, especially when we keep hearing about Bitcoin's fixed supply, what's the engine driving this? For this deep dive, our mission is to, well, cut through the complexity and uncover the core insights behind Ethereum's current momentum.
Exactly. Yeah, we've sifted through the latest data, everything up to about May 12th, 2025, and we've pinpointed like 6 key forces really shaping Ethereum's value right now.
Okay, six forces. So what are the essential pieces we need to understand to, see the full picture here?
Right. So we'll be looking at how Ethereum's supply is actually becoming deflationary. That's a big one. Then there's the increasing commitment from institutional investors. Also, the significant advancements from recent tech upgrades,
Mm.
especially Pectra.
Pectra, right. Heard a lot about that.
Yeah. And also how staking is impacting the available supply, the ongoing expansion of DeFi and NFTs on the network. And finally, we can't ignore the influence of the broader economic landscape. We want to give you the crucial info without, getting totally lost in the weeds.
Okay, sounds good. Let's jump right into this first one then, supply deflation. It feels like a really fundamental shift, especially when we're so used to that Bitcoin scarcity argument.
It really is. I mean, Bitcoin's cap supply, the 21 million coins, that's absolutely central to its appeal as like digital gold, right? A store of value.
Hmm.
Ethereum doesn't have that hard limit. So,
Sure.
yeah, in theory, its supply could just keep growing. However, a really pivotal change was the introduction of EIP 1459 a few years back.
Ah, yes, the fee burn mechanism.
Exactly. It implemented this system where a portion of the transaction fees, the base fees that get burned, like permanently removed from the Ethereum ecosystem, gone.
So hang on, the more activity there is on the Ethereum network, the more ETH just vanishes. That's a pretty interesting dynamic.
It is, yeah. And this burning process got a major boost, a real catalyst with the Pectra upgrade. That went live very recently, May 7th, 2025. Before Pectra, the daily burn rate was hovering around maybe 70 ETH per day, something like that.
Okay, 70 ETH.
After the upgrade, it more than doubled, instantly almost.
Wow, more than doubled. Just like that. What kind of ripple effect does that have on the total supply picture?
Well, it's pushed the annual inflation rate into negative territory. It's down to minus 0.53%. So we're not just talking about slowing inflation anymore. The actual total amount of ether in existence is decreasing.
It's actually shrinking.
Yeah. To give you a concrete example, look at May 8th, 2025, the day right after Pectra launched. The net change for the day was a decrease of roughly 400 ETH. More ETH was destroyed than was created through issuance. This deflationary pressure, it acts as a pretty significant tailwind for the price, you'd imagine.
Right. Fewer coins available, basic economics, all else being equal. That could definitely support a higher price.
Okay. Now, you also mentioned big institutions are getting more involved. What does that look like on the ground? What are we actually seeing?
We're seeing some substantial moves. I mean, really significant. For instance, back in December 2024, BlackRock picked up over $250 million worth of ETH.
$250 million. Wow. Yeah. And the capital flowing into Ethereum ETFs has now hit an impressive $2.1 billion. And look, this isn't just a one-off thing. Major financial institutions, big corporations, they've continued to allocate capital to Ethereum all through 2025.
Yep.
It really suggests a growing belief in its long-term potential.
That's a serious amount of serious capital coming in. What's the sort of broader sentiment? What are the market watchers saying?
Well, looking at commentary on X, formerly Twitter, gives some interesting perspectives. There was a 2024 report from @GalaxyQ. They stated pretty unequivocally that institutional adoption is driving the digital asset market. Full stop.
Okay.
And you had @TedPillows predicting flat out that institutional adoption will drive the price of ETH. Sana Research, too, in their 2025 outlook, they put an $8,000 price target on Ethereum, and institutional adoption was like a key pillar of their whole analysis.
$8,000, that's bullish.
It is, and it's a strong indicator when you see these established financial players publicly stating their conviction like that.
So the narrative is definitely shifting. It's moving beyond just the early adopters and crypto natives to include, well, serious institutional backing. Let's turn to these technological upgrades then, particularly Pectra. You highlighted its impact on the burn rate already, but what else makes it so significant?
Right. Pectra is a really comprehensive upgrade. It was implemented, as we said, May 7th, 2025, and it brought together 11 distinct Ethereum improvement proposals, or EIPs.
DATs, yeah. The proposed changes.
Exactly. Think of them like that. Pectra's main goals are really to significantly enhance Ethereum's ability to handle more activity, its scalability, and, crucially, improve the overall experience for users. Make it easier, cheaper.
11 upgrades at once. That sounds like a major overhaul. Can you maybe give us a glimpse into a few of the most impactful ones, how they're changing the game?
Absolutely. Let's pick three key ones. First, EIP 7702. This introduces something called smart accounts. Now, this is potentially a huge deal for everyday users because it could allow them to pay transaction fees, gas fees, with a wider variety of tokens, not just ETH.
Oh, interesting. So you wouldn't always need ETH sitting in your wallet just to do something.
Potentially, yeah. Imagine not having to worry about that specific step. It lowers friction. Then there's EIP 7251. This one dramatically increases the maximum amount of ETH that a single validator can stake. It goes from 32 ETH all the way up to 2048 ETH.
Whoa, from 32 to over 2,000. That's a massive jump.
It is, and it makes participating in securing the network, staking at a much larger scale, way more attractive, especially for those institutional players we were just talking about.
Right, makes it easier for them to stake large amounts. Okay, what's the third key piece of this Spectra puzzle?
The third crucial one I'd point to is EIP 7691. This increases what's called the blob capacity.
Blobs.
Yeah, think of blobs as like extra data containers that layer 2 solutions can use. Rollups like Arbitrum or Optimism.
The express lanes for Ethereum, right,
Right.
to make things faster and cheaper.
Exactly. They process transactions off the main chain. By increasing the size and number of these blobs, the target goes from 3 to 6, max from 6 to 9 per block. Pectra makes these layer 2s much more efficient and cost-effective. This lower cost for using layer 2s, it doesn't just save users money on fees. It could actually pave the way for totally new kinds of decentralized apps that were maybe just too expensive to run directly on Ethereum before.
Okay, so better user experience with fee payments, easier large-scale staking for institutions, and making layer 2s much more efficient and cheaper. It sounds like these upgrades are really making Ethereum more user-friendly and boosting its capacity significantly. How does all this tech stuff translate into price movement, though?
Well, these improvements are fundamentally designed to attract more developers and more users to the Ethereum ecosystem.
Yeah.
Logical, right? A more scalable, more efficient platform naturally encourages greater adoption, more activity.
More demand.
Exactly. Specifically, that increased blob capacity we mentioned, that's expected to really fuel the growth of those layer 2 solutions. And more activity on these layer 2s ultimately still leads to more transactions settling on the main Ethereum chain, which in turn means more ETH being burned through that EIP 1559 mechanism we talked about earlier.
Ah, okay, so it's kind of a virtuous cycle. Better tech leads to more usage, which leads to more ETH being burned, potentially supporting a higher price.
Cool.
Got it. What's the buzz in the community then? Are people connecting Pectra directly to the price moves?
Oh, definitely. On X, Balan put it very succinctly. Price increases after the Pectra upgrade are due to improved scalability. And at Tedpill has also observed, Pectra is the largest upgrade by number of EIPs, which will impact price. So the consensus seems to be pretty clear that these technical leaps are a direct factor in the positive price action we've seen.
Okay. Let's zoom in a bit more on the staking aspect. You mentioned EIP 7251, making it more appealing for institutions. How does the act of staking ETH just generally influence its price?
Right, so Ethereum runs on proof of stake, POS. This means individuals, institutions, whoever, can stake their ETH. They lock it up, essentially. By doing that, they participate in validating transactions and securing the whole network. Now, the key thing here is, while that ETH is staked, it isn't readily available for trading on exchanges.
It's taken off the market.
Precisely. It's removed from the active circulating supply. And as we discussed, the Pectra upgrade, by massively increasing that maximum stake amount per validator, has made this whole process even more attractive, particularly for the bigger holders, the institutions, who can now commit much larger chunks of ETH to staking much more efficiently.
So as more and more ETH gets locked up for staking, there's just less of it actually floating around on the open market to be bought and sold.
It's exactly that, yeah. We've seen reports flying around on X about a pretty notable increase in ETH being staked by major exchanges right after the Pectra upgrade. That directly changes the supply dynamics. And there was also chatter before the ETF approvals about large addresses, whales accumulating ETH, likely with the plan to stake it. That further drove up demands for ETH specifically to be staked.
Right.
So this reduction in the available circulating supply, it naturally puts upward pressure on the price. Less supply, same, or growing demand, price tends to go up.
Basic economics, yeah. Lower supply can definitely push prices higher if demand holds up or grows. Now, another huge part of the Ethereum ecosystem is, of course, the whole vibrant world of DeFi and NFTs. How is their growth contributing to this overall picture?
Yeah, DeFi, decentralized finance, and the NFT, or non-fungible token market, are predominantly built right on top of the Ethereum platform. It's their home base, really.
Hmm.
DeFi covers that whole range of financial services, lending, borrowing, trading, insurance, all operating without the traditional banks or central authorities.
Right, the peer-to-peer finance stuff.
Exactly. And NFTs, as most people probably know by now, represent ownership of unique digital items. Could be art, collectibles, virtual land, music, all sorts.
And we've definitely seen both of these sectors go through some pretty significant booms, maybe some busts, but they seem active again.
Precisely. As we've moved through the first part of 2025, the total value locked, or TVL, in DeFi protocols on Ethereum is getting close to, and in some cases even beating, previous all-time highs.
Really? Back to all-time highs.
Yeah, it's showing real resilience and growth. And the NFT market is also showing strong signs of recovery and renewed activity. People are trading again. Now, here's the connection. Both DeFi and NFT activities inherently require the use of ETH. It's the network's native currency, whether it's paying gas fees to interact with a DeFi protocol, or maybe posting ETH as collateral for a decentralized loan, or obviously buying an NFT. Increased activity in these sectors directly translates to increased demand for Ether itself, which naturally supports its price.
Right, so the more people are actually using Ethereum for all these decentralized applications and trading digital assets, the greater the demand for ETH, the underlying fuel that powers it all. Makes perfect sense. Is the community talking about that connection?
Yeah, we saw a comment on X that kind of summed it up nicely. ETH is dominating with RWA and stablecoins supporting the price,
Hmm.
which highlights Ethereum's continued strength as that foundational layer, right?
Right.
RWA, by the way, that's real-world assets being tokenized and brought onto the blockchain, another big growing trend happening, mostly on Ethereum.
Okay, interesting. So we've covered a lot of ground with factors kind of internal to the Ethereum ecosystem, the supply burn, the tech staking, DeFin, NFT usage. But what about the bigger picture, the broader economic environment we're all living in? How are those macroeconomic conditions influencing things?
Well, they certainly play a role. You can't really isolate crypto from the wider economy. The broader climate definitely influences how investors view risk and where they allocate capital, including to alternative assets like Ethereum. For instance, right now we're observing a trend of falling interest rates in many major economies.
Right, central banks easing off a bit.
Exactly. And when interest rates fall, the returns you can get on more traditional, safer investments, like government bonds, they become less appealing. That can prompt investors to start looking further afield, exploring assets with potentially higher growth prospects, even if they come with more risk. And cryptocurrencies like Ethereum often fall into that category.
So lower returns in traditional finance can make crypto look, relatively speaking, a bit more attractive.
That's a significant part of the equation, yes. We're also still seeing ongoing concerns about inflation in various parts of the world. And historically, or at least theoretically, some investors turn to assets like Bitcoin, and increasingly Ethereum too, as a potential hedge, something to protect their purchasing power if traditional fiat currencies are losing value.
The inflation hedge argument.
It's part of the narrative. Additionally, there's been quite a bit of anticipation, especially in the U.S., surrounding the expected change in leadership at the SEC chairman role coming up in January 2025. There's a hope, at least within parts of the crypto space, for perhaps a more crypto-friendly or at least clearer regulatory environment moving forward. Regulatory clarity often boosts market confidence.
Yeah, a more predictable regulatory landscape could definitely reduce uncertainty for investors, especially the big institutions. What are people saying about these wider economic factors in relation to ETH?
We saw one comment on X from a user stating that increased trade transactions and improved macroeconomic conditions will encourage risk-on sentiment, pushing up ETH prices. Which reflects that general idea, right? That when the overall economy feels healthier and investors feel more confident taking on risk, what they call risk-on sentiment, that tends to create a positive backdrop for assets like Ethereum.
All right, wow. We've really dug deep into a whole range of factors here. Let's try and bring it all together for everyone listening. What are the key takeaways? Why is Ethereum's price rising, especially when it doesn't have that fixed supply like Bitcoin?
Okay, yeah, let's summarize. In essence, we're seeing this really powerful combination of factors all working together. First, you've got Ethereum's supply, which is now actually deflating, shrinking, and that trend has been significantly accelerated by the Pectra upgrade boosting the burn rate. That's huge.
Inflation. Okay, number one.
Second, increasing adoption by institutional investors. That shows growing mainstream confidence in its long-term value proposition.
Big money coming in. Got it.
Third, those technological advancements like the Pectra upgrade we detailed. They're making the platform fundamentally more scalable and user-friendly, which naturally attracts more activity and more users.
Better tech, more users.
Right. Fourth, the rise in staked ETH. More ETH being locked up reduces the available circulating supply out there on the market.
Less supply available.
Okay. Fifth, the continued expansion and health of the DeFi and NFT ecosystems built on Ethereum. That's driving strong organic demand for ETH itself.
People actually using it.
Exactly. And finally, sixth, those broader macroeconomic conditions, things like falling interest rates, maybe some inflation concerns, we're making alternative investments like Ethereum potentially more attractive compared to traditional options.
So it's really not just one single magic bullet, is it? It's a convergence of these, well, really significant forces, all kind of pointing in the same positive direction for Ethereum right now. It's fascinating to see how these different elements interact and really bolster Ethereum's value in its own unique way, even without that hard supply cap like Bitcoin.
Absolutely, yeah. And it really underscores the dynamic nature of Ethereum, doesn't it? It's constantly evolving, constantly improving its capabilities.
This has been an incredibly insightful deep dive. Really helps clarify the picture. So maybe a final thought for everyone listening as we consider all these interconnected factors, the deflation, the institutions, the tech, the staking, the usage, the macro wins. What do you think might be the next major catalyst on the horizon for Ethereum? And maybe how might these different forces we've discussed, how might they amplify or perhaps even counteract each other as we look further ahead? Something to cue on.